Hello everyone. I hope that you are doing well. Today's session will focus more on value-added tax, where we'll be moving on to a new part of a legislation being VAT. VAT is actually based on transaction, so it's actually referred to as a transactional based sort of a tax system, as it is an indirect system, which means that it's based specifically on the transaction when we're dealing with the supply of goods and services. The way in which it is taxed and assessed by SARS will be directly through the transaction. The transactional tax for VAT is actually levied on the supply of goods and services. One of the things that you need to understand when you are dealing with the VAT or the VAT Act is the fact that it is actually broken down into specific parts. You have the very important parts that talks about the definitions in terms of part one, and you need to understand these definitions more in detail so that it will be easier when you are dealing with the way in which we should go about computing VAT, either at a standard rate of 15% or at a zero rated, or if we are dealing with an exempt sort of a supply. One of the things that you need to understand is that you have to understand the definition, for example, of a taxable supply, of an enterprise, the input VAT, output VAT, and so forth. Okay? Because you'll notice the fact that this term enterprise will be coming more often as we go further with the concept of VAT. Okay, so VAT, as I've been saying, it's a transactional tax that is based on transaction. It will be levied on the supplies, and these supplies are actually of goods and services. Okay. Now, one of the key things that you need to understand is that for the concept of VAT to actually work, we must have a supply. So this actually means that if there is no supply, there cannot be any VAT. And that supply have to be made by a VAT vendor. Okay, so what do we mean? What do we mean by a concept of VAT? For a concept of VAT, we mean that in line with VAT, we have to be, or we must have two parties that are involved in a transaction, and we can therefore be able to have a claim on input tax or VAT as a result if we are buying from a VAT vendor. Okay, now one of the things that you also need to remember is that if you're talking about input tax, we're actually talking about a tax that is deducted on all of the expenditures which will actually be incurred by an entity. So we'll then have to claim an input sort of tax on those expenditures that we have incurred. And also the framework in terms of calculating the tax that is payable over to the authorities. That is our output tax, less our input tax. Then you'll be left with your VAT that is payable to SARS. But it does not always hold true that you'll always have a VAT payable. You must have a VAT, you might have a VAT that will be refunded to you as an entity. Okay. Now, I've talked about the input tax. Let's talk about the output tax. Now, the output tax, it is actually the amount that is paid over to SARS. So what we mean by an output tax over the VAT period, we mean that it is the amount that is payable with respect to the enterprise. For example, if we have made the sales in a local community within the republic, we'll then have to charge VAT on those sales at our standard rate of 15%. One of the things that you need to understand and remember is that for VAT to kick in, there has to be a supply. However, the way in which VAT is charged in line with the charging section 7, it's bring in the notion that it is actually applied at a rate of 15% of 115. Now 115 means the 100 plus a 15, but we'll discuss that a bit later. Okay, now that have to be levied by the vendors at a standard rate. Okay, the standard rate that is applicable in line with section 7, straight from our VAT Act. It's actually currently levied at a 15%. However, that can also be charged or levied at a rate of 0%. Okay, so in a situation where you are dealing with a zero rated supply, then VAT will be charged at 0%. What we need to identify or know, we want to know as to whether a supply will actually be charged at a zero rated or it will be charged at the standard rate, because it will depend on a transaction or on a information that is furnished within the equation, and then you will decide from there. One of the things that is very important for you to know is that if you are dealing with a zero rated sort of a supply, you have to show and display this in terms of a calculation, and not just put a dash and not show that it was a zero rated. Okay, we do know that there will be no sort of outflows if you're dealing with a zero rated supply, but then in terms of presenting it in a logical way, displaying it to SARS in terms of disclosure, when you are submitting these returns, it's very important that you show such information. There's also the exempt supply. We look quite a lot in detail in terms of exempt supply in line with section 11. Now, the VAT Act, it contains a very, very, very detailed, specific definition in line with, part 1 of our VAT Act. Please go through that so that you understand these definitions and you know them in detail. Okay, so I did give you earlier the sort of a framework in terms of how then we go about computing the VAT that is payable to SARS. It's our output tax on our supplies within our VAT period. Now, these output supplies, or sorry, these supplies within a VAT period, they could either be charged at a standard rate of our 15%, or they could be charged at a zero rate of a zero rate being 0%. Okay, then you will then have to decrease your output tax by an input tax on the supplies that are made to the vendor. Okay, I think this is weird repeating. We're decreasing our output tax by our input tax on the supplies that are made to the vendor. Okay, then you'll get your VAT payable to SARS. However, you might have a situation whereby you have a refundable. Okay, also what you need to understand is that we tend to attract the output tax in terms of our supplies, and it could be as a result of sales, but it does not always hold true that it will only be limited to sales if we are dealing with a concept of output tax. Sometimes we have a situation of a deemed supply. For example, if you look at section 8, subsection 8, it talks about the deemed supply concept, and in those situations where we have a deemed supply, we'll have to then levy it at our standard rate, at our tax rate. Okay, now if it's deemed, that means that the act is saying that we should be charging VAT on this particular supply. It will be outlined in terms of the legislation. It's quite explained it nicely. However, there is a point in time whereby you'll be told that under this condition, then it will not be considered as a deemed supply. So you'll have then to take those information into consideration. Okay, we also might have a VAT input on other items besides just the ordinary expenses or the normal expenses, such as our rental, our acquisition of goods within the entity. We might have a situation whereby we have VAT on capital expenditures. For example, if you're dealing with an entity that have acquired some sort of property, plant, and equipment, then we'll have to take some consideration as to how then are we going to claim an input tax on that. Okay, so if you're dealing with the VAT question, what you could be asked in terms of test and exams, you could be asked to calculate the final amount at the end of the VAT period. And also, some of the things that you need to be able to differentiate is the difference between the VAT period and the year of assessment. In terms of the year of assessment, we know that if it started on 1 March 2017, it will finish by 28 February 2018. But there's a difference between the two, because the VAT period might only be limited for a 2-month period. Okay, so you need to be very careful as to how then you deal with this. The VAT period could be a situation of a month, it could be 2 months. It's actually depend specifically with the type of entity and the registration for the VAT with the relevant authorities being SARS. Okay, now someone asked me a question earlier during our session as to what we mean by indirect. Okay, so indirect refers to the fact that the text is not being assessed directly by SARS. So there's some sort of a medium entity that will collect these taxes when goods are being purchased or when it's actually making the sales, and then they will then have to hand them over to SARS. In the process of paying this over to SARS, then the entity will claim or will reduce that amount by input tax that it's actually claiming for the goods that and services that they have actually went about in terms of purchases as a normal expenditure. Now, this is very important due to the fact that in terms of VAT, we look more into transaction, and normally it's at a monthly basis. Okay, so if there is no supply, this is worth repeating. If there's no supply, we cannot have VAT. Okay, so supply, it's actually telling us about, or it essentially means that a particular transaction have actually taken place. Okay, there's particular questions or key questions that we need to ask ourselves in terms of dealing with the computation of VAT. The first question is as to whether all supplies are VATable. And the second question that we need to ask ourselves is does it mean that all the supply, they attract VAT at a standard rate of 15%? Or the other question that you can ask yourself is, can we claim VAT from all the supply? That is, if we tend to render a particular service or we actually sell goods to a customer, can we then claim input VAT from our purchases of those goods that we have disposed? Okay, then I talked about the critical question the other day, said that the key critical question that have to be answered at all times when you're dealing with a VAT question is that the supply must be in an act or in a course of a furtherance of an enterprise. Now, in terms of Section 7 of our VAT Act, which deal with the way in which we are imposing or charging, which is a charging section, it actually gave us the guidelines that they have to be supplied. These goods and services, they have to be supplied by any vendor of those goods. They have to be supplied by him in a purpose, with an objective, or in a course of a furtherance of an enterprise, which means that the transaction has taken place as a result of business, as a result of furthering a business activity. So if you go to Section 1, you notice the fact that the definition of an enterprise is highly defined in terms of our VAT Act, and it's very important that you understand what constitutes a supply in a context of furthering the enterprise, okay, or in a process of carrying on a trade. Okay, so it's explained it quite nicely there what will not be considered. Okay, like if you look at expenditures that are incurred for paying salaries, such are not meeting the criteria of a supply. Okay, now one of the things that also you need to understand is that in terms of a standard rate being a 15% and a zero rated percent, we have to understand this and know as when are we supposed to apply a standard rate of 15%, when are we supposed to apply a zero rated sort of a threshold. Okay, now there have to be two parties to a transaction for VAT to apply, which is something that I mentioned earlier, and there cannot be only one party to a transaction. So it's very important for us to understand this and not confuse 0% and exempt. Okay, when the VAT Act or when the VAT is at a rate of a 0%, what it means logically is that the rate in which the person can claim the VAT is actually at a 0% when we are conducting a purchase of a particular item. So he can then be able to claim an input VAT of that 0%. But sometimes when we actually sell the item after the period of purchase, we can then actually sell it or levy it on a standard or at a standard rate of 15% depending on the situation. So what it means basically is that the 0%, it does not actually mean that something is exempt. The exemptions are actually stated and explained quite nicely in our legislation in terms of section 11, but we'll look at that a bit later. Now, SARS actually want to know if you have any zero rated items. So actually disclosing such information, such items, is very, very important to SARS. Okay, it's important for us again to understand the items that actually constitute a zero rated, and we have to then understand also what items are exempt. Being able to distinguish and separate between the two is the key to understanding this concept of VAT. Okay, so if you understand the two, then it will actually be easier to be able to work out whether something is actually at a rate of a 0% or if something is exempt. Okay, because usually in terms of exempt, one of the things that you need to understand is that if something is exempt, you then have to state it and say that that particular item is exempt from VAT. Stating that information will give you marks rather than just saying something, just putting a 0 and not stating that an item is exempt. Okay, so it's very important for us to understand this quite a lot. As I've said, that it's not always the case whereby in terms of our output tax, it will be charged on those specific items that you know, like the sales. There is also a situation where you have a deemed supply, as I've explained. Now, in this situation, you are compelled by the authorities, being SARS, to then levy VAT at a standard rate. Okay, so the VAT Act itself give us this specification or specific situation where it will actually tell us as to what we are dealing with, and you'll be able to see whether you are dealing with a deemed supply in terms of section 8A. However, it does also tell you where the criteria then falls away of actually being classified as a deemed supply. For example, if you deal with some sort of a particular asset that have been damaged or stolen beyond economic repairs, under those consideration, then the indemnity award under insurance will then be classified or be not deemed to be a supply. It's very important for you to understand all this information that I'm bringing to you. Okay, now the exempt supply, if you look in terms of section 12 of our VAT Act, it does outline this. I'm sort of been quoting section 11 as the exempt supply. Actually explained quite nicely in section 12, not section 11. Okay, now the VAT Act is actually broken down to this specific section that are zero rated or exempt, and it gives us as a guideline as to how then do we go, and also the standard rate in terms of section 7 subsection 1, our charging section. Okay, we then have to understand that in terms of our VAT Act, okay, the definition of an enterprise, one of the key things that you need to note is that it has to be a vendor, and that vendor have to be registered for VAT, and also must be conducting the trade continuously, and the goods and services must then be supplied for a consideration. Consideration is an arm's length transaction, getting something for in exchange of those goods that are disposed. Okay, so the key or one of the concept that they love to test the most is the purchase of the motor car. Okay, with respect to the motor car, you have to understand this, that import tax is actually denied in a motor car in terms of section 17 subsection 2. It's explained it quite nicely under that section. Okay, so we will be dealing with this problem a bit later. We also have a concept of financial services. Financial services are actually exempt for VAT, and these financial services are fully defined within section 2 subsection 1, and they guide us as to what actually constitutes in line with section 2 subsection 1 as to what constitutes a financial service. For example, we can talk about the exchange of currency, the charging of interest. Actually, it's constituted in exempt, and it's one of the famous and the favorite one that you might see in terms of test and exam. So the charging of interest is actually considered to be one of those activities that are classified as a financial interest. So if you look in terms of section 2 subsection 1F, look at in terms of section 2 subsection 1J, our pension contributions in the form of pension premiums, medical aid subscription, and so forth. Those are actually considered to be financial services. Very important that you understand this and you know it as you know yourself. So if a consideration such as those that are actually outlined and articulated in terms of section 2 of our VAT Act is actually financial services, and you then have to understand that there will be no VAT on such, since the financial service qualify for being exempt in terms of our Act, our VAT Act. Okay, for now I thank you. This is part 1 of the VAT Act. Please watch out for part 2 anytime soon.